Good morning, everyone. This is Bagger Don. It is March 14th at about 12 o'clock, and we are off and running. I hope you weren't listening to Bob Passanti this morning. He's there every morning. You know, whatever week it is, whatever's going on, if it's options expiration, if it's a jobs number, if it's a Fed number, if it's, sunny outside, 75 to 85% of the time the market goes up that week. Well, that's the case all the time. I mean, there's a reason for that. Um, but hopefully he didn't lead you into the oh shit trade. But you're looking at a chart that we don't usually do a whole lot of charting. A lot of our systems are algorithmic and meant to be run intraday. So we just go where the money's going. And, you know, right now the market is, selling down. It's no great surprise to us, and our algos are doing their thing. If this afternoon the market stops and goes up, guess what? Our algos will stop and go with the market. It's that simple. Now, if you think you can do this if you think moving averages are algos, they're not. Moving averages don't work. But we carved up this chart of the SPX, and you got to put this in a high definition if you're watching this on YouTube. And what we carved up was a pattern called the Gartley. So I'll go ahead and describe what this is. The bearish Gartley usually occurs at the end of a significant run. In fact, there was a bullish Gartley. I mean, there's Gartleys all the time, but when the market bottomed in March of '09, some 10 years ago, it was on a bullish Gartley. And the bullish Gartley, there's an X point, and the X point is usually below the A point in a bullish Gartley. In a bearish Gartley, the X point is above the A. Where's the X point? This is the X point up here. And you say, Don, well, how the hell? Well, you don't trade the X point. You don't trade the A point. Let me explain. This is the X on the SPX up here when she topped out. And we can look back and say, obviously, at this point, this is where the top was. Is it the permanent top? Only time will tell. But this is the X point. So we come down to the last time she made an obvious low. And we're being conservative, so we're using the body. So this would be the A point. X to A. Then we run up. And what we're interested in is the 618 retracement, which was right in here. Whoops. Yeah, right where those dotted lines were. So we went a little bit higher, and then we rejected the price, and we came back down. So this is the X, this is the A, this is the B, and then we come down. We're looking for the formation of a C point. The C point can occur any place between the A and the B, which is an obvious point of, a reversal pattern. And that's exactly what we got here. So this is the C point. Now, what do we look for? We look for price to advance. And actually has a little gap here. The bulls got so excited. They said, oh boy, this means we're not going down. No, that's not what that means, folks. Not in a bearish Gartley, not by any means. It means we're gonna fake the jock straps off everybody. We're gonna go up and we're gonna pass the B point. And we're gonna go up to the 0.76 retracement right up here. We went right to the penny. Perfect. Right to the penny. We reject that price and come down. That was yesterday. Today, Bob Pisani this morning was talking about options expiration. We weren't listening to him. 75% of the time the market goes up. Yeah, okay, Bob. Go hang out with Bill Griffiths out at the pool or something, all right? You two guys. So we head down. Now look what we are. We took out yesterday's low. We're now into this gap. See, there's a little gap here, so we're going to probably go down and probably fill that gap. But what we're in essence making, though, if this is the X to A to B to C to D. Where do you trade? Right here. This is where the short trades should have gone on. Now, you got to have the confidence of your convictions, but you also don't want to be foolish. So you get your shorts on and you put your protective measures right over this, because if we close over this bearish Gartley pattern will be negated. And we don't have a crystal ball. All we can do is play probabilities. The likelihood is that this is in fact a bearish Gartley, and this is the leg that you want to play, because where is this leg going? Well, there are going to be many little head fakes, and there's going to be a lot of chatter on CNBC, and it's this and that. If you listen to that, you're going to miss the trade. You could be missing it now. You want to be trading, you wanted to get your short in here and put your protection right up here on a daily basis, because this leg is going to come down, blow this out, challenge the low, and most likely blow out that low. And you'll look back and say that was the high. Would've, could've, should've. Has anybody shown you this? We have. So feel free to follow us. Feel free to subscribe. Feel free to earmark this and come back. Today is March 14th, but this is going to be up on YouTube. Our videos, by the way, are high definition, much better than the YouTube crap, but YouTube is YouTube. So if you come back, months from now and stumble across this video, can you only imagine if you had, seen it live? Can you only imagine if you were a member so that you could have profited? This is what we do day in and day out for our members. We can't promise you that you're going to make money, but we can promise you that you're going to learn, you're going to have fun, and we're going to save you time and save you money, because you're not going to listen to the Bob Passantis of the world, the Barney Fife. Okay? He's out there with Bill Griffiths, hanging out at the pool or something. I don't know. Good luck. Feel free to give us a call. Watch this Gartley. If I was to draw it up for you, let me see if I can draw it up. We don't have at the moment the Gartley software, but let's see if I can draw this up for you. So it'll look something like that. And let me weight this so you can see it. And then, because it's kind of pretty when it's all drawn out. Okay, so we take it from here. Okay, this is the B point. We'll see how much time. I only got so much time on. Let me make this one a little bit thicker too, so it all looks the same. And here we go. We're going to get another trend line. I'm going to capture this point. That's the B point. Going to come down here to the C. We could come down to the tail of the here. I try to do it in the most conservative fashion possible. And then we're going to draw that one. And then we're going to take this trend line from here up to the D point. That was just yesterday. Yesterday's close. That's where you wanted to get on it. And just stay on it. If you're a daily swing trader, what you don't want to be doing is, coming in intraday and introducing all that noise into your trading. This is the X point. This is the, this is the A point. This is the B point. This is the C. This is the D. This is where you wanted to enter the trade. And your stop level would have been right up here. Stop out. Right there. But that's the trade. Enter. Enter short. It's that simple. And then what folks do is that if you can see these little patterns here, they will draw little dotted lines. I'm not going to do that, but you can see them if you do a YouTube search or a Google search on bearish Gartleys. That's what we have going on. The objective is down here. So let me go ahead and get this. Now we did this last week, so you know we plan on headed down here, and then we draw the arrows, arrow down, arrow down. Now that's what the pricing chart shows us, but the big but. We don't calculate the money we're going to earn. We calculate the money we're going to lose if we're wrong. If our short is up here, maybe we got some protective options on here to, so we can go out and sit by the pool and just let things happen and play out. Don't get in there and mess it up. But that's where the stop out is. So we know, at least over the next few weeks, how much we're risking. So hopefully we're risking very little to make a whole lot. Because you see, folks, in order to have a profitable equity curve, it's not your win-loss ratio. It's your profit factor. How many dollars are you making to how many dollars you are losing? If you don't know what that is, you've never heard of a profit factor before, and you don't know what it is, then you're definitely not following the right people. I'm Bagging Don at StockMarketCaddy.com. Feel free to check us out. Feel free to follow. Feel free to join for a month. The memberships are just month to month. Good luck.